Infinite banking does not create a drag on your cash flow. And you might think that because infinite banking depends on owning a whole life insurance policy that, as many antagonists claim, takes several years to accumulate enough cash value to be useful as a personal banking tool. That actually is not the case. I'm particularly well suited to speak on this topic with authority because since 2013, I have been a practitioner and an expert on infinite banking and the tax-free cash growth warehouse finance strategy. Aloha. I'm Stan Cox. I joined the ranks of finance industry professionals back in 2011 as a licensed life insurance producer. I've been through the life insurance mill, so to speak. And within a couple of years, I became an independent broker. Along the way, I discovered the infinite banking concept by Nelson Nash, then researched and learned everything I could about infinite banking. I have become an expert on the strategy, focused on educating and helping people with it. And I've even written a couple of books about it. The biggest mystery about it at first was, how does one design and create a life insurance policy that is particularly well suited to the infinite banking finance strategy? Turns out that the design is a critical key point, and the one that I believe eludes all the naysayers that insist that whole life takes too long to grow enough cash value to be of any use for self-financing. Another critical point is the fact that not all life insurance companies offer the same design options or treat policy loans the same way. So let me emphasize here, for a life insurance policy to provide the maximum benefits and advantages for the owner of the policy to practice infinite banking, it must be a properly designed, participating whole life policy with a mutual company who provides non-direct recognition policy loans. I know that's a lot of insurance speak that most folks have no idea what it means, but rest assured, all of the questions that those things raise are addressed and answered by the videos you can find right here on this channel. And for a little additional clarity, while universal life insurance is technically cash value life insurance, universal life insurance, including GUL, IUL, and VUL versions, are not, I repeat, not useful for the infinite banking strategy. Moving on. So when I say that infinite banking does not place a drag on your cash flow, please understand that I am referring to the infinite banking strategy as practiced by using the cash value of a properly designed, participating whole life policy with a mutual company that offers non-direct recognition policy loans. Since this is not a class for life insurance producers and due to legal compliance issues, I will not get into real specific stuff here. But when a policy is properly designed, the majority of the premiums paid for the policy will be paid for the cash value riders that are major components of the design of the policy. That being the case, over 90% of those premiums are attributed to the cash value of the policy and are available to leverage within a few days of being paid. That being said, it is true that the premium paid for the whole life base policy, the chassis that carries the cash value riders, does not contribute to the cash value of the policy the first year. From the second year onward, a steadily growing percentage of that base premium does get directed to the cash value of the policy. So while a whole life policy with no cash value riders will have no cash value the first year and will slowly grow cash value over time, A policy that is properly designed for infinite banking will have at least 50% of the total premium paid available to leverage in the cash value the very first year. And that will steadily and quickly increase in the percentage that is directed to the cash value in each succeeding year. There are variables such as age and health condition of the insured, but typically the policies I design for my clients produce usable cash value the very first year of between 60% to 85% of the total premium paid. Generally, up to 95% of the cash value may be leveraged with policy loans. So if you pay $1,000 in premium, you can figure on having between $500 and $800 available to leverage with a policy loan. You might say, hey, that's putting at least 20% drag on my cash flow with that $1,000. And now here's where the financial magic of infinite banking comes into play. Right now, the company I use most for these accounts is paying 6% dividend interest. And that's the lowest it's been in 20 years. But here's the thing, that interest is compounding and it's tax-free. So every year you pay premiums on your policy, larger and larger percentage of those premiums are being deposited into your cash value account. And the company is paying you compounding dividend interest, which is bound to go up. And that's tax-free money being added to your account. So really, in just a few years, the life insurance becomes virtually free because 100% or more of your total premiums are being directed into your cash value. And that's not all. Even if you have your account leveraged to the max, the whole amount of your cash value will continue to receive that tax-free compounding dividend interest. That means you are saving all of that lost opportunity cost that you otherwise would be paying on every dollar you spend without the infinite banking strategy. That means if you put $1,000 into your account and you leverage $750 of it to buy something you want, you're saving the 6% opportunity cost right off the top. That's $45. And at the same time, you're earning 6%, not only on the $750 you've leveraged, but on all of the rest of your money in the account at the same time. That's another $45 or more. And that's tax-free. So that's another $13 you saved in not having to pay any tax on that gain. So with infinite banking, you now have the wonderful item that you so wanted and leveraged your cash value to buy, and you saved $58 in the process by not paying the opportunity cost or the tax on the interest gains, and your cash account grew by $45 or more, actually more. And let's not forget that $1,000 you paid into the account has bought you life insurance. And that's an asset that will pay out over 300% of whatever you paid into it, even if you pay into it for 75 years or more. And this is a kind of a simplified explanation, but I think you can see how infinite banking produces benefits and advantages beyond any other finance strategy. And with all the gains and advantages, there really is no drag on your cash flow when you put it into practice. Okay, so there's all kinds of videos. We have over 200 videos here on this channel answering all kinds of frequently asked questions, describing how to put the strategy to use for specific purposes. And there's all kinds. I mean, the uses are unlimited. There's the link to buy my books on Amazon.com if you want. There's my contact information in the information box description box below this video. There's a link to my Calendly page if you want to book a phone call with me. And these phone calls are discovery calls, no cost, no obligation. You know, you have questions, we have answers. We're here to help, and we want to help you. So for now, mahalo for watching. Aloha.